All right, guys, in today's video, we're going to talk about VA loans and being able to gross up disability income and retirement income. And the reason I wanted to make this video so quickly today is we have a situation that just happened a couple of days ago where we have a rescue VA loan, and I hate to say it, but that does happen a lot, unfortunately. And VA loans can be a little bit of a different animal. Are they difficult? Are they super hard? No. It's just a little bit more understanding of some of the guidelines and things that you can do. So, what happened in this situation is we got an emergency phone call, basically, first time homebuyer, veteran buying their first house, and they're buying it from a builder. And, a lot of times builders give incentives that they try and manipulate and say you have to use that lender to get those. That's not true. Builders can have any lender give those, but a lot of times they'll want that in-house lender to do that because they can control it, and they're also typically paying some type of marketing dollars or doing something to help that builder out. That's neither here nor there. So the situation that happened is this person's been in contract on this house. This veteran's been in contract on this house since about the beginning of June, and they're scheduled to close next month in September. So it's a new build, and everything's fine. Everything's fine. Everything's fine. The veteran is not married. It's him and his significant other, but they're not legally married yet. So if you remember from some of my other videos, whenever that occurs, if a veteran and non-veteran are going on loan together, they require a down payment. It typically ends up being around 12.5% or a little bit more down payment required depending on the calculations. However, he's being told since the end of May that he qualifies fine with just him on the loan, doing a VA loan, so they're doing no money down. Well, fast forward, all of a sudden, this lender's now telling them, hey, we need to put your fiance on the loan, and we need to switch you to FHA, 3.5% down. So this is basically about another $7,000 that this veteran would have to bring out of pocket to get into the house. Money that they don't necessarily have, they're going to have to scramble for, etc. to do this. This is when I get, really irked off. Number one, why did it take 3 months, 4 months to get from here to there? Now, I understand if it's a situation where someone might have gotten their hours cut or, income was shifted or something of that nature. The income was changed, how things happened, et cetera, or they weren't locked in yet and the rates increased. All that stuff makes sense. However, when they're in contract with the builder, they should have been locked right away anyways. So that's what happened. They were locked in. The builder helped them do a buy down that the builder's paying for, and I believe they got locked into a rate of around 5% or so on this buy down for this VA loan. Well, now, since they are switching loan programs, their new interest rate is going to be around 7%. And the builder's saying that they don't have a buy down program for FHA. So one, why are we switching our veteran from a VA to an FHA loan? And two, it's now more expensive, and they also have monthly mortgage insurance with the FHA loan. So we get a phone call on frantic, emergency loan, we have to go into triage. We take a look at it, and if you remember from the other videos, the first thing we always want to get is the veteran certificate of eligibility. There's so much key information in that loan or in that information for the certificate of eligibility for us that we need, guys. We need that. That's super important. It is the veteran's golden ticket that we need. So I take a look at this, and we end up finding out that this veteran has 100% service-related disability. Okay, so number one, they're exempt from the funding fee. Number two, we get to gross that income up 25%. Okay, any type of VA retirement income, any type of disability, the VA allows us to gross that up by 25%. So in this case, this veteran's disability is nearly around $3,900 a month that they're getting. So when we're allowed to gross that up by 25%, it's a huge increase for us. As a matter of fact, we were able to take that figure and basically create it to where his actual income that we could use was around $4,800, $4,875, give or take, somewhere in there. And examining the information that the other lender did for them and just kind of going over everything with the veteran, what we found out is this other lender was never grossing up his disability income. So now all of a sudden he's saying, oh, we're not getting our automated approval. That, if you remember, every single loan gets run through an automated approval engine. We have to do a manual underwrite. However, because of where your debt to income ratio is at, it doesn't meet our VA standards for what a manual underwrite is. So therefore, we have to switch you to an FHA loan and have your girlfriend go on it and all this. And they're freaking out. You know, they've got about a $4,000 deposit into this home, all of this stuff. This is all stuff that literally should have been squared away within the first 24 to 48 hours with just a little bit of extra questions. Now, because of where the market's moved, there's no way we can get them the same interest rate on that buy down and with what the builder's offering them to be able to do it. So I literally had to spend 45 minutes of my afternoon to help this veteran out, being on a three-way phone call with the other lender, having him finally put his ego aside and explaining to him why this loan should work. Basically had to walk him through how to gross up the income, how to properly calculate the residual income in the system, and now we have an approved eligible. And this veteran's able to move forward and get into their house. Now, at the end of the day, I care about the veteran and their family and them getting into the house. What irks me is it matters who you work with, especially when it comes to specialized VA loans like the VA home loan. I had to take almost an hour out of my day to tell somebody else how to do their job. It's embarrassing. It's not okay. It's not right by the veteran. End of the day, though, it had a happy ending, so I'm glad it worked out. So, rule number 1, get your certificate of eligibility. That should be the very first thing any lender is asking you for if you are a veteran, to make sure we have our VA loan eligibility. Number 2, it's got vital information on there. It tells us if you're exempt from the funding fee and if you receive any disability whatsoever. If we have disability, we get to gross that disability up 25%, and it can make or break a loan. Luckily, thank God, in this case, we were able to help the veteran out. They're moving forward still with their VA loan and are going to be going on to move forward into their house. So very important. I wanted to make this video, 1, on understanding how you can gross up disability and retirement income on VA loans. And number 2, it matters who you work with. Hey guys, give me a like, give me a follow. It helps the YouTube algorithm out. And make sure to stay tuned for any future videos and also take a look at other videos around. Thanks for watching. Happy Friday. Everybody have an amazing day. We'll talk to you soon. Bye-bye.